Hi there, welcome to Kneppy Invest. I am in between two night shifts right now, and the first thing I learned upon waking up was that Andrew Symonds, the legendary cricket player for Australia, had passed away in a car accident west of Townsville last night, much too young at 46. I always remember Andrew Symonds, his partnership with Matthew Hayden in the Melbourne Tests. I believe that was in late 2005, an awesome innings and he really needed that. He was under pressure to keep his spot in the Ashes side. And at least Andrew Symonds has provided us with some memories that will last a lifetime. Unfortunately for Andrew Symonds, that lifetime has now come to a completion. So always remember to be careful when you are driving because car accidents can happen just like that. Now, because I am in between two night shifts, I did take the dogs for a walk just after I woke up, and it was really humid outside and unusually humid for this time of year, which is not surprising because we've had 5 days of rain in Brisbane. And when you have a lot of rain, that just increases the humidity. Now, as a professional meteorologist, when I talk about humidity, I'm not referring to relative humidity. I'm referring to dew points. And dew points right now are 23 degrees in Brisbane. That is unusually high for this time of year. You expect dew points of 23 in the middle of summer, not in the middle of May. So the technical update is probably the video I'm most comfortable with. So that's another reason I'm doing this video today. The other reason I'm doing it today is I found some really interesting charts in relation to companies where we have seen the share price drop a fair bit over the past few months. And right now, the share prices are at interesting levels. Now, just because the share price of companies has fallen a significant amount, say 50, 60, 80%, doesn't mean the shares are cheap or companies are cheap right now. They could have been significantly overvalued before the share price dropped. And that's the important question we have to ask ourselves. When we see the shares of a company we might like drop a significant amount, is this an opportunity to buy these companies at good value, or were the values of the company significantly overvalued before the drop and they're fair valued or even still overvalued right now? So the 5 companies I'll be featuring in this video are Altium, Megaport, EML Payments, Peninsula Energy. Now, that's more of a buy the dip opportunity, and Medical Developments International. Now, before we have a look at the charts for these 5 companies, I'm just going to go briefly look at the Nasdaq and the XGO because they're both interesting points right now. Now, let's have a look at the XGO. We had a really good day or trading day on the last trading day of the week. The XGO was up about 2% after a really big down day the previous day. And what's really interesting when you look at the XGO, this is over a 6-month period. It is going sideways. There is no uptrend or downtrend in the XGO. We have seen the XGO reach 7,600 twice in this 6-month period. So it seems like it is trading in a range, and 7,600 is the top of the range. The bottom range tends to be just below 7,000. We have seen below 7,000 reach 3 times, and every single time we've seen the XGO get below 7,000, we have seen a little bit of a recovery. Now, the really interesting thing about the XGO on the Friday is just the 2-day candlestick pattern, and it's very similar to what we saw in late January, just there. Oops, that way there. You see these 2 days, we had a big down day on this day here, and then a big up day. In fact, it golfed, almost completely engulfed the previous day. So that was sort of a sign that the market had turned from being bearish to a little bit more optimistic, and we did see the XGO going to run about a 2-week run. So you just see these 2 candlesticks right here, and then compare it to these 2 candlesticks right here, almost identical. Now, history doesn't absolutely repeat, but it often does rhyme. So it doesn't mean the XGO will go on a bit of a tear over the next 2 weeks, but it does tell you that there's a little bit more optimism in the XGO right now. And the reason there's a little bit more optimism in the Australian markets is because what happened in the American markets on the last trading day of the week, the Nasdaq was up over 4%, or maybe it was up about 3.8%, but still a little bit of a bounce in the Nasdaq. So let's have a look at the Nasdaq right now. Now, I was talking about how the XGO is not real. There's no really real trend in the XGO right now. It's just going sideways. You can't really say that with the Nasdaq. It's pretty obvious when you look at the last 6 months with this index that it is in a downtrend, a well-defined downtrend developing. And when you do see downtrends, you also always see the share price or the index bounce. And we saw that back in the middle of March. The Nasdaq got down to 13,000. We saw a nice bounce. A lot of experts, a lot of amateur investors would have thought that was the end of the downtrend in the Nasdaq. I'll refer that as a dead cat bounce. And on the last trend day of the Nasdaq week, we saw another little bit of bounce. But this is just because the index was oversold. We had seen the Nasdaq fall over the past month from 15,200 to 11,800, and it really has to see a little bit of a bounce here. Would not be surprised to see the Nasdaq reach about 13,600 to 14,000, moving back towards those two moving averages I have here, which is the 100-day and the 50-day. The last time we saw a bounce, the Nasdaq actually went above the 100-day moving average for a brief period of time. So wouldn't be surprised to see a little bit of a bounce over in the Nasdaq over the next few weeks. First company I want to feature is Megaport. This is a fairly popular company, a company founded by Bevan Slattery. I believe he did found this company. A fairly popular company, not only among retail investors, but also among fund managers and the like. In fact, there was a Livewire podcast start of the year where they asked numerous fund managers to name the company they thought would outperform the market. I think it was either this year or the next few years, and Megaport was the most popular company. And ever since then, the share price has absolutely fallen off a cliff from $22 to a current share price just above $7. But we have seen the share price reach COVID-19 lows, which is just below $7, which is that horizontal dashed line. So that is the levels we saw during the COVID-19 financial panic. And we've seen those levels reach right now, which means the negative sentiment in Megaport is sort of akin to the negative sentiment we saw in the overall market during March 2020. But there are some reasons behind that. And one of the reasons was, recent reasons, was their Appendix 4C was not regarded too highly by the market, by the industry. And that's when we saw the share price drop 28% in 1 week. So this is a weekly chart. And we have seen these really big weekly drops in Megaport since January of this year. We saw a 13% weekly drop, 19% and 28%. And when you look outside those big weekly drops, we've also seen drops between 5 and 10%, which is telling us there's a lot of negative sentiment right now in Megaport, and there is something driving this share price down. But because we have seen the share price reach those COVID-19 levels, we did see a little bit of a bounce on the Friday. Share price of Megaport jumped up 10%, and that was on the day. A lot of these companies like Megaport that have dropped significantly in recent months, we did see a little bit of a we did see a little bit of a jump in the share prices of these companies. That does not mean that this downtrend in Megaport has come to a completion, but that COVID-19 low is a really good support level. And the very fact the share price has bounced off that level is a good sign moving forward for Megaport. But the share price has to remain above that level. If it falls below that level, that's a really bearish move, and the share price could fall a lot further from there. The next level I'd be looking at is around about $4 to $5. And as we turn our attention to the daily chart, I do like to look at weekly charts, monthly charts, and daily charts. But when I look at the daily chart here, it's a well-defined downtrend, really starting from about November, where we did see the highs of about $22. The share price is continually moving down. The moving averages are moving down as well. We've seen a crossover between a 50-day and 100-day moving average. So everything is telling us that share price of Megaport is in a downtrend. And the only reason I'm interested in Megaport right now is that the share price has bounced off that COVID-19 low, which is portrayed by that dashed line, horizontal line here, and it bounced perfectly off it as well, just above $6.50. So we might see a little bit of a bounce over the next few weeks with Megaport's share price. Wouldn't be surprised for Megaport share price to go back towards $10, which would be a nice little bounce. But we have seen that with a lot of American tech stocks. We've seen share price of those companies fall a lot. Then we've seen the share price bounce upwards of 50% before we've seen the next downtrend in the share price. And the share price falls below the start of the bounce we saw. So I wouldn't be surprised to see the share price of Megaport go back to $10 and then fall away again. And then, as I mentioned in the previous slide, if the share price falls below this horizontal dash line, which is the COVID-19 low, that would be a bearish move. So at this point in time, I've kept Megaport on my watch list because as the share price falls further and further, the valuation of this company does get more enticing. But the problem is with Megaport, it's not a profit-making company. They are burning through a lot of cash. So I would like the management of this company to have an eye on profitability. Now onto Altium, and this was an absolute market darling for a long period of time, for about 2012 all the way to 2019 or 20. The share price has really been going sideways ever since the high we saw just before the COVID-19 financial panic. Share price reached $42 then. Share price fell all the way to $24. Then we saw a bit of a bounce. Share price fell back to $24 again in April, May of last year. Then we saw the share price rally to above $44, about $45. And then we have seen share price fall away again, hit just above $24. And the reason I'm mentioning $24 is pretty obvious when you look at the COVID-19 low, also the April-May low we saw last year. Every single time, which is only twice, so small sample size, but both times we've seen share price reach $24, we have seen the bounce in the Altium share price. So it seems like $24 is a nice little support level. Just like Megaport, the share price falls below $24, that would be a fairly bearish move. I'm a little bit more bullish on Altium than Megaport, simply because Altium is a profit-making company. Now, you might argue that even though they are profit-making, they are still quite highly overvalued, but the management does have really good goals for the future, and if they hit those goals, I do think this is approaching good value at $24. But we also saw a nice little bounce on the Friday, also saw increased volume as well, so that's pretty good for that this possible low in Altium share price has been reached. I only say possible right now because we don't know what's going to happen in the future. We could see the markets absolutely tank and they could drive Altium share price down well below $24. As we take a look at Altium's daily chart here, which goes back to April last year, I've maintained the COVID-19 and the May lows of last year here, which is right on $24. If you go back to the start of this chart, you can see share price went sideways right on $24 for about 6 or 7 trading days and then zoomed higher. Altium share price can be quite volatile. We saw a massive up day in June last year and then a massive down day in September. We saw another massive down day on Thursday, the 12th of May. Share price of Altium dropped about 17%. It didn't get quite to $24. The low on that day was $25. And that's when Altium made its way onto my watch list. I was hoping the share price could reach about $24, which would make this a possible buy. Then we did see the share price rally on the Friday because the market did rally. And because share price of Altium did drop 17%, I think it was oversold and some people got excited because the share price was nearing that $24 support level. So an interesting company. I do like this company, particularly their goals they do have for the future. And because I do think Altium is a high quality company, you do have to sometimes pay higher for quality. Onto Peninsula Energy, and this is a uranium company. So if you are high on uranium, maybe Peninsula Energy is high on your watch list. There are numerous uranium companies on the ASX. I'm only going to be looking at one, but the charts of a lot of these uranium companies are very similar. So Peninsula Energy's weekly chart here goes all the way back to 2017, and the share price of Peninsula Energy was in a well-defined downtrend up until the lows we saw in October of 2020. Share price reached about 6 cents or something really absurd like that. But sentiment has shifted to be more positive, not only with Peninsula Energy, but many other uranium stocks. We have seen uranium prices starting to increase. So that's why these prices of these companies have moved into uptrends. So the reason I've included Peninsula Energy in this particular video is not because the share price has dropped a significant amount, but it really has. Since the highs of 35 cents we saw in September last year, the share price has actually halved to 17.5 cents. But this is a possible buy the dip opportunity because we have seen the share price come under pressure over the past few weeks because uranium prices have fallen. But the share price of Peninsula Energy right now is on the trend line, which means it is a possible low-risk entry point at 17.5 cents because if it falls below and breaks the uptrend, that would be a bearish sign, which would mean an automatic sell. So that's why this would be a low-risk opportunity. We might see a bounce from here because it has reached that uptrend line. And that uptrend line will become a little bit more obvious as I show you the daily chart. So let's have a look at the daily chart daily chart right now. So as we turn our attention to the daily chart for Peninsula Energy, and one of the reasons I like to look at weekly charts and have a look at daily charts as well, but the weekly chart sort of weeds out the noise, and you can see a lot of noise with Peninsula Energy right here. But as I zoom in, you can have a better look at this uptrend in Peninsula Energy, a well-defined uptrend from the lows we saw in late 2020 when the share price was something absurd again, like 5 or 6 cents. And the share price right now is on that uptrend. The last two times we have seen the share price reach that uptrend back in August last year and then again start of this year, we have seen the price of Peninsula Energy go through the roof. The last time we saw that was, well, not the last time, but in August last year, we saw the share price of Peninsula Energy increase from 12.5 cents to a high of 35 cents in a few months. Doesn't mean that's going to happen again, but Peninsula Energy is an uptrend. Nice positive sentiment behind uranium. Now, uranium prices have fallen recently. Doesn't mean it will continue to fall. This could be just a little bit of a correction in the share price, a short-term correction, and that's why Peninsula Energy's share price has moved to right on that uptrend line. So a potential, as I mentioned in the previous slide, a potential low-risk opportunity, particularly for those who are bullish on the future of uranium. Now onto EML Payments, and this is the weekly chart going back to late 2016. And from late 2016 to start of 2019, share price of EML Payments was going sideways. But then there was a massive amount of hype in this company during 2019, which drove the share price from $1.50 to a high of $5.75 just before COVID-19. And then because everyone panicked in the market, and companies like this absolutely suffered because they thought no one was going to be buying anything. EML Payment share price dropped from $5.75 all the way back down to $1.25, which was the low in that period. And then the market overreacted again, and the share price of EML Payments went from $1.25 all the way back up to $5.75, which was reached in April of last year. So almost 1 year ago was the share price high for this company. And ever since then, a lot of negative sentiment has built in EML Payments, some bad news, some negative trading updates, which we did see a few weeks ago, has driven the share price all the way back down to COVID-19 lows of $1.25, $1.30. So we have seen share price of EML Payments bounce off the COVID-19 lows. So that's why EML Payments right now is on my watch list as a potential buying opportunity. I do think the market is completely overreacting to EML Payments. I think the share price is at really good value, but I'll leave that up to you to decide whether there is good value with this company. But that's what happens when there is negative sentiment in a company. It can drive the share price down back to either fair value or good value. So I think there is potential for that right now with EML Payments. Now, in saying all that, when you look at the daily chart for EML Payments going back 1 year to the middle of May last year, the share price is in a well-defined downtrend. Now, the reason I want to go back to May last year is that's when the issues with the Irish branch of the business came to light. Share price dropped 50% in 1 day. So that was 1 year ago. And the market hasn't really recovered from that, even though the problems with that Irish business haven't been completely resolved, but they're nowhere near as bad as the market feared. But this just shows you what negative sentiment can do with the share price. And then the company released the negative trading update a few weeks ago, which has driven the share price down to about $1.35. So share price is still in a downtrend, and there is some worth to not buying shares in a company that are in a downtrend. But because the company's shares are at COVID-19 lows, because I think there is good value, this is why EML Payments right now does look like an interesting opportunity. The last company I want to talk about in this video is Medical Developments International. And I've been following this company for a while. They make that whistle, that pain relief green whistle, and everything I've heard about this whistle seems amazing. But Medical Developments is having trouble gaining traction with that green whistle. At one point in time, they were profit-making. They were in profit, but now they're in loss, and they haven't really started to really increase that revenue coming into the business. And the reason I've put Medical Developments back onto my potential buy watch list is just where the share price sits right now in comparison to where it sits in the past. Right now, the share price is at a 6.5 year low, which is portrayed by that dashed horizontal line, which is not a support line. The last time we have seen a share price this low was way back in the start of 2016. So share price right now is at $3. It's been as high as $11.15. And funnily enough, that was just before COVID-19 financial panic. And we saw the share price go on a run just before then. So at that point in time, I thought I'd missed my boat, but the share price has been under pressure ever since then. There was a nice, real solid support level at $3.50. We saw $3.50 reached about 3 times in the past, back in 2018, 2019, and almost in the COVID-19 financial panic, we saw the share price reach $3.50. And then again, in July last year, share price reached $3.50, and there was a nice little bounce. Share price has moved below that support level of $3.50. So that was a bearish move. So whenever you see support levels broken, that is a bearish move. And simply because the share price right now is at 6.5-year lows, it makes this company interesting. But keep in mind that every single investor who has bought into medical developments in the past 6.5 years has bought in at higher prices, which means there's going to be a lot of resistance moving forward for this company. So I think the business performance of medical developments has disappointed the market, and that's what has driven the share price down. So we do need some signs from the company that they're in some sort of growth. I'd like to see growth in revenue, almost significant growth in revenue moving forward. They have a really good product. They just need to sell this product. That's all I have for this video on Megaport and 5 other companies. Also had a quick look at the Nasdaq and the XGO. So the XGO is going sideways. The Nasdaq is in a well-defined downtrend. So some of these companies are looking interesting right now. You have to be aware share prices are in downtrends, and there are a line of thinking that you should not buy a company whose share price is in a downtrend. But nice support levels have been reached for companies like Megaport, Altium, EML Payments, historic lows. And when I say historic lows, I'm talking about COVID-19 lows. For medical developments, it's 6.5-year lows. So just because the share price is at a 6.5-year low doesn't mean the company is cheap and good value. There could be some reasons behind the shop in the share price. If you have any questions about companies I featured in this video, please leave your thoughts, your comments, or any questions you have in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.